Hi, welcome to the Market Alert for Friday, the 5th of August 2022. So yesterday the main news, of course, was the UK increased rates to 1.75 from 1.25, a 50 basis point increase, the biggest hike for 27 years. And then Bailey followed it with this, UK economy to be in recession for more than a year. It'll be longer than a year. They're always off by at least a year or two. Bank of England warns as it hike rates. US stocks traded cautiously amid external growth concerns, geopolitical risk, that's China, Taiwan, and looming NFPs, non-farm payroll numbers, which are out today at 1:30. And hawkish Fed speak crushes crude and crypto and bonds and bullion bid yesterday. So what happened to don't fight the Fed? Indeed. And economic news today, well, as we just mentioned, the big one is the non-farm payroll numbers. They're out at 1:30, and the gold-silver ratio is starting to move down overnight there, turning slightly redder, but we'll get into that in more detail. But let's kick off and have a look at the Dow. So yesterday, the market down, which we'll see in the 30-minute chart in a moment, but not closing below the 5-bar moving average, bouncing off this overnight and heading back to the upside, discounting the prospect of the unfolding war and saber rattling between Taiwan and China. Well, more so China, actually. Taiwan don't want the war, thanks to Pelosi's visit there on Wednesday. But the Dow shrugging this off at the moment and trying to move to the upside. Watch the 89% area there. Crucial area when you've got a bounce like this and it tries to attempt to come back. We saw already that the market struggled with this area, and it's the third attempt to actually get through the 32,906 level. 30-minute chart for yesterday, you can see the Dow down sharply when the cash market opened. It'd been up in the pre-market session on the futures market, but the cash market was very volatile, up and down, as you can see there, and eventually has made its way back on the overnight as investors, or rather the traders, have brought the futures market or used the market to bring the prices back up there. German DAX, only a 62% retracement in this market, moving strongly higher yesterday, wouldn't go down. And you can see they're actually struggling with the 13,671 level that we looked at yesterday, which goes back to here. And you can see the market coming back through this as it traded to the 62%, the high of yesterday, or just within a whisker of it. And now we're showing a bit of resistance there. We had some supply. It'll be interesting to see if the market holds, but it's all down to those non-farm payroll numbers. So we'll get a bit of a movement this morning, and then the market will go quiet waiting for them at 1:30. So in the 30-minute chart, it was a one-way bet all morning, not a single red bar, no bars closing below the 5-bar moving average until the release of the Bank of England interest rate decision. This brought some weakness into the market, particularly after Bailey said that there was going to be a year of recession. The market didn't like this, and then it got into a sideways move. The market actually retraced from here to here. You'll see came all the way back to 89, crossover, and some buying coming in. And then you've got mini retracements here, all the way through here, and then moving to the upside. Just remove this and move this over from the yesterday afternoon high to here. You'll see that the markets and the DP is around the same thing there with the 89. So it'll be interesting to see if the market makes its way to the downside. But like I say, this is the one to watch out for. This red line here is the non-farm payrolls. 5-minute chart for yesterday. Well, as we saw in the 30-minute, the market just moving to the upside. Then it put in its retracements, had a breather to the 50-bar moving average over sold, moving to the upside overbought, and then waiting for that news from the Bank of England. That came in, and then we started to get the opposite, where we had a few green bars followed by red bars, few green bars followed by red bars, whereas in the morning it was a lot of green bars followed by a few red bars. Double correction there, and again a lot of green bars, couple of red, one red, and that's how you can determine just by looking at the chart where the the main thrust of the market is, whether it's buying or selling, just by looking to see the difference in the colours of the bars. Market sideways overnight, which you can see they're trading up to the DP, which we've just seen in the 30-minute chart. Market holding there on an intra-day basis at the moment. 200 MA there holding things together. Okay, so this week's results so far, profit 997.54. Not a bad day yesterday. It was a bit frustrating waiting for those numbers, but once they came out, no problem at all. 60-40 on profit to loss and 2.28 on the profit factor, which is fine. So yeah, not a bad week at all, considering how frustrating it was to begin with on Monday. So yeah, we'll see what happens today when we get the non-farm payroll number, see if we can add to this. In the S&P, the market above the 89% retracement. We're getting towards these highs to the left. We'll put in the main one there, 4203. And we've got to take out yesterday's high first, this red line here. Very quiet day, all things considered, but the market showing some strength with it still closing above the 5-bar moving average there. 30-minute charts, again, in the morning session, the market moving up in the futures. Bank of England ruins the party, down to the DP, and then just traded sideways and made its way back by what looks 62% retracement, 62-78% retracement there for the S&P, and currently above the DP. As you can see there, and the averages just needs to get back above the 5-bar moving average and head up towards yesterday's high, which again, just to remind you, in the daily chart needs to be taken out first before we go to the 4203. Meanwhile, in the UK, market's reaction was down, traded to 78% retracement in the morning session. We'll look at this in the 30-minute, but before we do, notice that again that the market is still closing above the 5-bar moving average, showing its strength. Yesterday morning, pre-market down to DP, and then again, not a single red bar in sight until we get the Bank of England announcement. Then we switch and we retrace 78% by the looks of things from there. So yeah, the market retracing all the way down to 89%, so up, and then all the way back to 89, and then inside of there you've got an 89 before the market's moved higher overnight as well. So moving up to 62% retracement from there back to there at the moment and over. Japanese yen interest rate decision yesterday affects the currencies. Market down to 62% retracement from trading to 62% on the upside, and the 20-bar and the 50 EMA as well, which you can just see there. So that retracement finding support, and it's oversold there, starting to move up on the overnight. This is the market's reaction to the UK interest rate decision. Market puts in a double bottom and then has just traded, well, it's a triple bottom actually, and has then just traded sideways to higher. Watch the low on this one as we wait for the non-farm payrolls. The pound down and then coming back before the close, sideways overnight. As I said yesterday, the pound is one of the easiest to predict. When they increase rates, they slam the price down. This is over 100 points, and then they brought it back at least 78% of the move there. Just have a look, yeah, 78% retracement there as the market then absorbed the news. This is just to shake out all of the traders, and then they bring it back. It's the same pattern all the time in the pound. And then finally in the metals, dollar and oil, you can see yesterday silver managing to it moved lower to begin with and then managed to close back above the 5-bar moving average. It's trying to break out to the upside. There seems no interest in slamming the price to the downside at the moment. That said, of course, they're still doing the 1 p.m. fix, which you can see there, moving up nicely yesterday, and then they just slammed it back. But overnight, you can see it's moving up quite nicely now off the DP. For silver, again, it's going to be waiting for those non-farm payroll numbers at lunchtime. Gold also moving up nicely now. We're up to 1792, up nearly. We're up over $100 from the low, aren't we? What was the low in this bar? Let's have a look. 1680. Yeah. So we're up just over $100 on gold in the last few weeks. A 30-minute chart. Again, you can see the slam at the 1 p.m. fix is nothing like they do with the silver market. Straight reversal back up there. And the dollar yesterday trading down to 62 as the pound recovered. And finally, crude oil under the hammer once more after the OPEC meeting on Wednesday. Prices still down there, but finding support at 92.87, which is an 89% retracement for the price of oil. So today is the big one for news this week. Non-farm payrolls 130. Let's see what happens. Let's just go and have a look at the numbers before we go. See what we've got forecast. Get an idea. So last time was 372,000 new jobs created. 250 are predicted and forecast, which will be interesting because if it comes out at this sort of level, it will give the Fed a reason to slacken off a bit with regards to its hiking policy, because it will have slowed the economy in their eyes enough, or the rate increases are starting to work. We'll have to wait and see. But whatever it is, it'll be, even if it's bad news, it'll probably be turned into good news for the stock market anyway. The only thing that will bring this market down now is not just the saber rattling in Taiwan, but if China do actually make some sort of preemptive strike against Taiwan. So be warned on any long trades when I'm thinking about it, that make sure you're protected, because if that does happen and it comes out of the blue, then the market will have a massive shakeout to begin with. So just be warned of that. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.